Hi everyone, my name is Matt Wilkins. I work as a product manager for fraud, and today I'm going to talk you through an overview of our payment fraud product. The fundamental value added by the payment fraud product for financial institutions is in the risk scoring of payments in real time, looking for fraudulent behavior. This is done across all of the banking channels where customers will interact with the bank. If a payment looks like it's fraudulent, our client wants to stop it. Do that before the settlement happens, before the money moves. This has a positive impact on the bank's bottom line because it's actually stemming the fraud losses from that fraudulent activity. And those losses are then expensive to recoup, difficult to recoup, and there's a lot of work to do. So doing that before the money goes out to the bank is a very positive thing. Once a suspicious payment is being investigated, a proper forensic casebook is needed, and we absolutely support that as part of payment fraud. This ultimately brings an investigation through to a conclusion where it will need to be reported internally. There may need to be reports for law enforcement or as part of the recovery process, and if predicate offences are indicated as part of it, that will then also go through potentially into disclosures onto the compliance side as well. Another very important part of the payment fraud product is being able to enable good payments. So where there isn't actually any fraud indicated, you want to do the monitoring and then release those payments as quickly as possible so that you're introducing this friction of additional waiting for the payment to be cleared only in the times where there is a valid level of suspicion which has arisen from the scoring of the payments. Staying on top of payment fraud is becoming more and more challenging for financial institutions. This has stepped up again since the pandemic, particularly because of the move online, which has just increased the amount of activity and the amount of options that are available for payments in the online world. This in itself, it has then led to more types of fraud and an increasing visibility of fraud in the public domain, which is something we all see, and it's leading into more and more interest and more scrutiny from the political side in terms of policy and also in terms of regulatory oversight going forward. So in the past, where the regulations would have been on the compliance side and fraud would have been really just totally a return on investment decision for institutions, now there's still the ROI side of it because obviously fraud hits their bottom line, but it's also a matter of staying up with the regulations, and there's so much activity within the payments industry to move both the choice and the scalability and also the fight against fraud forward, and banks have to keep up with all of that. Fraud losses have grown substantially, and the amount of different vectors within which they have been taking those fraud losses have grown, so that the fraud losses grow, and on the financial side at the same time the costs have increased. It's become more expensive to hire skilled fraud investigators, so clients are constantly on the hook to do more with less. And at the same time, the sophistication of the fraud attacks from the criminal gangs is growing. They are enabled by the growth in technology and the globalization of technology and the scale of the technology. In order to do that, AI is obviously another step up for them in terms of new tools and techniques which they can use to find ways in for that theft. But it's also innovation in terms of the organization structures of fraud gangs, where they're getting more and more sharp at being able to industrialize how they do this at a scale where they can focus on the weakest points, and if they find well-defended parts of the financial industry, they will just move on to somewhere else that is a bit weaker. As part of the growth online, there's also the move towards open banking and more channels, more ways of making payments, which are not always under the same level of control as from financial institutions as they would have been previously. So you've got the growth of fintechs, you've got the growth of payment service providers and so on, who do these payments in a different place from where the banks can see them. But again, all of them have the same push to be able to monitor and manage the levels of fraud that they can support. So the growing regulatory pressure is happening everywhere. I guess there's jurisdictions around the world that are leading on that in terms of, I guess the UK is often quoted about that, but also you see it in places where the payment volumes are growing very quickly, such as India and Brazil, and also particularly Australia have been having good results from additional regulation, and institutions have to stay in step with that. From a more technical perspective, the volumes are just growing and growing and growing. So even if functionally you're doing the same thing, just doing the same thing gets harder because of this this constant growth that's happening. So that's a big set of challenges that institutions have to find their way out of, specifically given that they also have legacy systems that they have to replace, and to keep moving on the technology side internally, even before they actually start really solving these fundamental business problems. What we offer with NetReveal Payment Fraud is the technology to solve these challenges, starting with, like I've been talking about already, the capability to evaluate and interdict on those in-flight payments, doing that very quickly at significant scales. As well as that, in order to do that, we have to be able to integrate with the client's payments ecosystem. So in order to process payments throughout the financial institution, they build an ecosystem of not only vendors, not external vendors, but also their own internal systems that they piece together and have been piecing together for years in order to be able to support and process payments. And our role is to act as one of the components within that overall ecosystem. And in order to be able to do this, our technology needs to be able to support the interfaces that they need us to support to click into that ecosystem. We need to be robust and fast enough to be able to do that, so that ultimately they can sign us off as being fundamentally in the loop of those payments that are happening in real time. The technology needs to be able to reduce false positives, make sure that the investigations and detections are as efficient and effective as possible, in line with managing the overall cost of the solution, and in line with doing more with less. And also the technology through the move towards Investigation Hub, we're now in the world of being able to provide Copilot support for payment fraud as well. So we have a version of payment fraud that exists in Investigation Hub as well, and we can use Copilot with that. And obviously as we move forward, we'll move forward into the never mind the generative AI, we'll move forward into the agentic AI world for that as well. So next, I'm going to talk about the different types of fraud that we see out there in the market, that we talk about very frequently with potential clients and clients. These are the headline areas that we detect within NetReveal. We're able to detect these, and you see them very frequently in terms of the headlines in the public domain, where these different types of scams and so on are very common these days. But there's obviously lots of details and lots of nuances under all of them, but I just want to introduce them all to you here. So the first one is APP scams, or APP stands for Authorized Push Payment. So this is typically where a customer of the financial institution is persuaded by a fraudster to send money to them. So ultimately the payment is authorized, the customer decides that they want to send the payment because there's been a level of trust built up between the customer and the fraudster. Now, a lot of the data that exists on really what's going on in that trust building relationship is stored in places like social media or in emails and so on. So it's not necessarily immediately available to the financial institution to find it. But at the same time, within the payment data that institutions look at, or within the data that they can see within their online web and mobile banking applications, or within other events that happen in the life cycle, and also looking at the counterparties of the payments, they can see a lot of this activity as it starts to happen. The next one, I'm going to go down and just talk about account takeover. So that's an example of unauthorized fraud as opposed to the authorized push payments. Account takeover is unauthorized because the institution's customer has not decided that they want to send this payment, but what they've done is somewhere along the way there has been typically a compromising of credentials of the institution's customer, and the fraudster has been able to take over that account, typically online. Maybe they got the credentials through a phishing campaign. Maybe they've been able to do it through installing malware on the device and so on. So those kind of activities then lead to the harvesting of credentials, which can then allow the fraudster to do account takeover and actually start, creating new counterparties for the customer's account, and then being able to send money to them. Third one there is mule behavior. So mule behavior, in a sense, is not the fraud itself, it's the behavior of specific account holders in receiving stolen money and then moving it on. So it's also tracked on the compliance side as well, because effectively fraud isn't a predicate and offence, and once you've got mule behavior, you've got that moving of stolen money. But at the same time, it's so tied in with fraud activity, and it's looking for mule activity is a really strong way of detecting basically the flow of funds that started out with stolen payments, and it highlights the interest that you have on the payment fraud side for the flow of funds, the whole network of payments through different senders and receivers, and the interest in senders and their counterparties as well. Social engineering, so tied in quite closely with the other two in terms of unauthorized and authorized. Typically, it's where the fraudster is manipulating a customer to be able to send payments again, and it's another place where the behavioral analytics are key to be able to find these types of fraud. Let's talk a little bit about detecting fraud fast. So we talk about low latency. We have a lot of language where we do things in real time. With payment fraud, what you have to do is you have to be specific in terms of what you call real time, and that's why we use the language low latency. Typically, you've got a very, very small number of seconds for a payment to be processed completely end to end, including moving the money and also doing this fraud detection on this as well. Certainly in the world of instant payments, which are becoming more and more standardized, for instant payments, you've really got seconds to be able to make these decisions. And it actually turns out that in order to be able to do the fraud scoring, you've really got milliseconds at this stage. So the fraud scoring has to happen very quickly. If you identify something that looks like a risk signal, then the investigation triage side of it has to happen very quickly as well. And we'll talk a bit more about that as we go through. But fundamentally, you've got the system making a decision. We have a product target for doing that of 50 milliseconds. And this highlights the fact that the payments that we're detecting on today are typically account-to-account payments, where this time frame it's still fast enough for account-to-account payments. You could go slower than that on account-to-account payments if you want to, but we're targeting this for account-to-account payments. When you go into looking at things like debit card payments and credit card payments, it's got to be another order of magnitude faster. It's got to be less than 10 milliseconds. And our goal from a product perspective is absolutely to get there in terms of speed and scalability. At the moment, sub 50 milliseconds is okay for us, and that's what we aim for in terms of receiving the payment, making a decision. That decision in that time frame is either to hold the payment, in which case you're then stopping it, just literally putting it on hold pending investigation, or else you release it and then let it go, which is that removal of the friction. And we hold payments automatically at the moment. We don't stop them. So the blocking of payments only happens after a human decision at the moment. So blocking payments altogether is not an automated decision yet. Our clients don't have an appetite for that yet. Maybe in future things will start to go that way. In terms of the work that we need to do in order to make those decisions and do that scoring on payments very quickly. A key part of what we do on that is a process that's called behavioral profiling. So in effect, what you're doing is you're building a holistic picture of the behavior of the customer account, and also on the behavior of the counterparties that they're sending the money to, so that it's not just the information on the payment itself. You know, you might be interested in where it's going to and that sort of thing, but you're also interested in the historical behavior of the customer and the historical behavior of the counterparty, in order that you can best score the likelihood of fraud on that payment. There's a big part of the processing that we have within the system that allows us to be able to configure that profiling and to be able to do that profiling the behavior. We're able to do it with rules. So fraud detection systems will always need rules. Fraud teams will always want to have their own rules and they own knowledge from their experts that they're saying, we think on our banking products for these payments, this looks like fraud. So we have rules. We also have AI models that can run alongside them as well. So there's AI that sits absolutely alongside the rules. And when you're evaluating a payment in real time, you can use the rules and you can use the inferencing of the AI together. And what we've seen in experiments with clients who were running real-time payments is that the move from the expert-driven rules through to data-driven models has given significant uplift. We're talking about 55% false positive reduction here, which is 55% less friction and cost. We've also seen improvements in the accuracy and the true positives that were found as part of these models as well. One of the key parts in the scoring that we do is that the profiling and the detection is aggregated up at the account level. So in a situation where you've got multiple real-time signals coming in of payments or against payments from different places, you actually want to bring in, for instance, other types of events as well. So not even just what we call monetary events. So payments would be monetary events. We also want non-monetary events, and we want to be able to profile and aggregate those up to the customer account level, so that when you're making a decision on a payment, you've got as much of the behavioral information available to you as possible. And I guess that's what I mean by the entity-based risk evaluations. It's all rolled up to the entity so that you've got the best context for that customer account when you're creating a score. And it also highlights that we've got situations where we can support batch payments into the system as well. Like we've done configurations for what we call corporate batches, which is an example would be the automated clearinghouse process in North America. So getting payments in real time is critically important because you have to stop them, but institutions in their ecosystems have batch channels that they send in as well, and we're able to support those. As well as detecting quickly, we then need to be able to respond quickly once a payment has been flagged as being suspicious. So we need to respond quickly. This is why we have a specific triage part of our investigation side, which is we have a user experience design target of being able to respond to a newly created payment detection within 90 seconds. What that needs then is that all of the information is available to the investigator to make that quick decision. The decision they're making ultimately is, do I want to block this payment or do I want to release it? Does it, after I've looked at it, does it look suspicious? If not, then I'll release it, and again, minimize the friction. If it does look suspicious, then I will block it at that point, and then that will then go into the investigation workflows for building that forensic book of evidence that I mentioned previously. But the key thing is that like most of the things in the fraud world, it has to be done quickly, and that requires all of the information to be available there for the investigator to do that. Making fraud investigations go quicker is something that is definitely enabled by having the generative AI components of Copilot, allowing us to do querying, allow us to build narratives and bringing together all of the reporting across the casebook together. So generative AI is a key enabler for ultimately making fraud investigations more efficient, in order to be particularly bringing out the conclusions and reporting for fraud investigation, to be able to gather and summarize information across all of the documents, across all of the different notes and activities that have been built up as part of this forensic book that's being built. And obviously the audit trails are there, as with all of the key functions of Investigation Hub. And I think it's important to say that so much of the capability of Investigation Hub in terms of tracking workflows, being able to build queues, and the administration and permissions side of it, all of those are common across all of the different types of financial crime that are covered by Investigation Hub, and fraud is absolutely part of that. Network analytics is a key capability that we've introduced into our products over the last few releases, and from a fraud perspective, it's a key part of the investigators toolkit. They want to be able to see that the customer sending the money is who they said they were, or who they're linked to, who are they related to, and there may not be the same requirements, for instance, as you might have on the compliance side in terms of things like ultimate beneficial owners, but the identity of the customer is clearly a significant part of who the fraud investigator is actually looking into. And not only the identity of the customer, but also the identity of the counterparty as well. It's quite possible that if you're investigating a payment that's gone outside of the institution, you may have very, very little information on the counterparty. You may just have an account number and a branch or something like that. But to build all of the information that we have together, and then to join up ultimately through flow of funds, which is exactly where our network analytics is going, to be able to see where these counterparties have interacted before, where the other suspicious linkages may exist. That's a fundamental part of what this fraud investigation is going to need, and it's great now that we have the entity resolution and network analytics capabilities as part of the product to do that. Why do we get chosen by our customers? First item there is really because we can act as a one-stop shop across all of that transaction monitoring capability that they need, both on the compliance side and the fraud side. So I've mentioned situations where fraudulent payments may end up being reported in compliance because of ultimately it's predicate offences. We've strong evidence that in multiple jurisdictions, the volume of suspicious activity reports that get created are weighted very heavily on the side of fraudulent events these days. So there's an increasing interaction and interlock between these different types of financial crime, even though in most of our clients today, they're managed as separate teams with separate budgets and so on. But what we give is the ability to do it both in terms of things like overnight batches, in terms of intraday batches, and also in terms of real-time low latency. We have a spectrum across all of those, and as our customers continue to go on their journey of moving from batch to more real-time, as the volume of payments grow and the speed of payments grows with instant payments and so on, there's just going to be more and more need to be able to deal with that all in one place. Second point there is the fundamental reason for having the product, and we have to be able to do that at a good scale, which is the low latency interdiction, which we talked about. We can use AI for points 3 and 4. We're able to use AI to show that we can increase the true positives and reduce false positives, which is undoubtedly good. So we're able to bring in the efficiency effectiveness that you get from using AI, as well as expert-driven rules. And we're able to do that in a way that sits alongside self-service for clients. So where they want to be able to go and bring in specific types of activity that they're looking for, their fraud analysts can do that as well. Finally, we have enterprise level investigations, which have the AI power for the extra efficiency, but we are able to do that at an enterprise level where we bring together all types of financial crime under the one platform. And we also have clients who just use our products today for enterprise level fraud investigation, where they're integrating alerts across a number of different types of fraud, and they bring that all together into a consolidated platform. So where they have disparate detection systems for different types of fraud, they choose to use our case management technology to bring that all together under the one common place for building their investigation casebooks. So that's my summary of the payment fraud product. Please feel free to get in touch if you want to talk some more, and thank you for your attention.